Have you ever wondered what happens to your money once they're in banks' hands? Why do banks take their time and effort to safeguard your money and pay you the interest? What's in it for them, and what's the catch? When you deposit your money into a bank, it doesn't just sit idly in a vault waiting for you to withdraw it. Picture this: you deposit $1,000 into Bank XYZ. Now, the bank has a cool rule it has to follow called the reserve requirement. It's like a savings goal set by the big boss, the central bank. So, out of your $1,000, the bank has to stash away $100 in its piggy bank vault. That's 10% of your total deposit. And it can play with the rest of it, which is $900. Think it of like the bank can only spend $900 out of the $1,000 you just gave it. Now the bank takes all these money. Now Bank XYZ is feeling adventurous. It lends out $100,000 to people who want to buy houses, start businesses, or do fun stuff like that. The deal is these folks pay back the money with a little extra, like a borrowing fee, let's say 5% extra every year. So the banks make $5,000 from these loan deals. But wait, there's more. The banks also has your savings and others, totaling $150,000. It gives people a little treat for saving with them, like a mini bonus, let's say 1% extra every year. So the bank pays out $1,500 to all the savers as a thank you gift. Now, if you do some math, $5,000 from the loans, $1,500 to the savers, that's $3,500 profit. That's money in the bank's pocket. This is called the money earned from the difference in interest. But guess what? Banks aren't just about lending money. They're also like these money adventures. They like playing with different money games called financial instruments. They buy government stuff called securities like IOU from the government. They also invest in stocks, which is like tiny pieces of company. Plus they get corporate bonds, which are like fancy IOUs from big companies. And they even dive into real estate, like in fancy buildings. And you know what's awesome about all these? These investments make more money for the bank. So with the mix of loan and investment, banks make a dough and keep the money world spinning. Alright, let's dive into these diverse financial instrument banks used to jazz up their money-making game. First off, we got government securities. Think of these as like these special IOUs issued by the government. When the bank buys government securities, they're essentially lending money to the government. In return, the government promises to pay back the loan with interest. It's like having a reliable friend who always pays you back with a little extra. Next up, we got the stocks. These are like tiny pieces of the company that you can buy and sell on the stock market. When banks invest in stocks, they become part owners of those companies. And when companies do well, the value of the stock goes up, and so does the bank's investment. It's like being a silent partner in the success of a big business. Then there are corporate bonds. These are similar to government securities, but instead of lending money to the government, bank lends money to big companies. In return, these companies promise to pay back the loan with interest. Corporate bonds may offer higher returns than government securities, but comes with a tad more risk. It's like being the banker in a game of financial monopoly. And last but not least, we have Real Estate Investment Trust, also called as REITs for short. These allow banks to invest in real estate without actually owning physical properties. Instead, they invest in companies that own and manage real estate properties. These properties generate rental income, which is shared among the investors, including the banks. It's like owning a piece of hottest properties in the town without the hassle of being a landlord. So there you have it. Banks use a combination of loans and investments in government securities, stocks and corporate bonds and RITs to keep the money spinning and the cash flowing like anything. It's like a symphony of these financial instruments coming together to create sweet, sweet music for the bank's bottom line. Thank you.